Our final speaker of the day is Elizabeth Gaines, Chief Executive Officer of Fortescue Metals Group. Elizabeth has been leading the team at Fortescue as CEO since February 2018, after joining the company's board of directors in 2013 and also serving as Chief Financial Officer. A highly experienced business leader with extensive international experience as CEO and Group Executive, Elizabeth has a proven track record of financial and operational leadership across a number of industries. In 2021, she was listed in the top 5 of Fortune magazine's Business Person of the Year list for the second year running. Needless to say, she is an inspiration to both women and men in the industry, and it is my pleasure to introduce her today. Please welcome Elizabeth.
Thank you, Courtney. Thank you and good afternoon, everybody. It's great to be with you here at Diggers, and I do want to congratulate the organisers, Jim and the team, on another very successful event here in 2021. And I acknowledge the traditional custodians of the land on which we're gathering, the Wongatha people of the Northern East Goldfields, and pay my respects to their elders, past, present and emerging. And I also extend this respect to other Aboriginal and Torres Strait Islander people joining us today. And before anyone asks, I haven't been to Cloudbreak in the last month, and neither have any of my colleagues here today. But I have, however, been participating in our incident response since I landed this afternoon. And I'm sure many of you are familiar with the story of Fortescue, established in 2003 by our founder and chairman, Dr. Andrew Forrest, AO. We have well and truly secured our position as a global leader in the iron ore industry. However, most may not be aware of the Fortescue Flywheel, and the Flywheel is the story of Fortescue's journey. A story which begins with pegging the Pilbara and securing strategic port and rail access, and then progressing to rapidly developing and ramping up our iron ore operations and our rail and port infrastructure, driving up our scale, lowering our operating costs, and then deleveraging the business. And it's a story about our people, challenging the status quo and using technology and innovation to deliver productivity and efficiency improvements and further develop our iron ore business. Fortescue's remarkable growth over the last 18 years has been a result of this constant momentum, driving our costs down from $50 a tonne to our current industry-leading cost position. And today we're seeking to replicate this momentum as we look to a clean energy future and we rapidly evolve into a resources and renewable energy company with Fortescue Future Industries, and I will touch on that a little bit later. And this success would not be possible without the hard work and dedication of our people, who are committed to our strong culture and our values. And at the heart of our culture and values is our unwavering focus on safety and our journey to zero harm. A highlight of our June quarterly production report was our total recordable injury frequency rate, or TRIFR, of 2, and that's an improvement of 17% from 2.4 at 30 June last year. And I do note that this is in line with our target to reach the lowest quartile of the ICMM for safety, which represents leading safety performance in our sector. And importantly, we continue to see a downward trend in the severity rate of injuries, and everyone at Fortescue is encouraged and empowered to take control and look out for their mates. Our leaders set their teams up for success by ensuring they have the time to plan their task and pause the job when something changes. And with the recent lockdowns along the East Coast, including New South Wales, we are reminded that we're still in the midst of a global pandemic. And at Fortescue, we maintain our robust COVID-19 management protocols to ensure that we can continue to operate safely. And you may have seen today's news that a contractor who was at Cloudbreak from the 20th to the 27th of July has returned a positive COVID test. So we're working closely with all relevant authorities, and we're continuing to take every precaution to ensure that COVID-19 does not impact our operations. And like many, we are concerned about the highly contagious Delta variant, and we do believe that vaccination is the key to protecting our workforce and to achieving workforce mobility across Australia. And we share the view of the Business Council of Australia that business, and specifically the mining sector, can play a role in the vaccine rollout, and we're encouraging all of our team members to receive a vaccine in line with the current directions from the federal government. And I would like to take a moment now to discuss an important issue for our industry and address the recent commentary regarding sexual harassment at mining operations in Western Australia. And as an industry, the safety and well-being of our team members is always our highest priority. And this priority extends to ensuring we're providing a safe and inclusive work environment. Fortescue has a zero-tolerance approach to harassment, bullying and intimidation. And harassment of any kind is considered serious misconduct and may be grounds for dismissal. We have a strong culture and it's built on integrity and respect. And we encourage our team members to speak out against any behaviour which is not in line with this culture and our values. And in line with this commitment, we've recently launched a workplace integrity review to encourage our team members to provide feedback on what we can do as a business to enhance those measures that we already have in place. And this review includes an online survey and focus group discussions across our operational sites, in addition to independently reviewing and assessing our current site security and safety measures. And our guidelines for the responsible consumption of alcohol remain in place, including daily mandatory alcohol screening for all team members before the start of every shift, as well as random drug testing. As an industry, we must and we can do more to ensure we have a diverse workforce that is reflective of our community and that we foster a workplace culture that truly embraces diversity and inclusiveness. And it is critical that we use forums such as Diggers to demonstrate this commitment. And I do know that my address has become somewhat synonymous with the annual Diggers Diversity Index, and this year I was very pleased to note a small increase in the number of females on the speakers list, which has increased from 3 to 4. And I think it's clear the industry still has some work to do in this regard. So moving to our operational performance for the June quarter, which we reported last week, and the unwavering focus of the Fortescue team has resulted in record quarterly shipments of 49.3 million tonnes, and that contributed to our highest ever annual shipments of 182.2 million tonnes in FY21. Ore processing and rail, together with the ramp-up and successful integration of Eliwana, all contributed to record quarterly performance, despite the setbacks that we all saw with wet weather and COVID-19 restrictions. Our C1 cost for the quarter was $15.23 a tonne, and that was 2% higher than the previous quarter, and that's due to inflationary impacts and COVID-19 related costs. And these were largely offset by higher volumes and the continued focus on cost management, with our FY21 C1 cost of $13.93 a tonne, in line with guidance and maintaining our cost leadership position. Moving forward, productivity gains through innovation and technology will remain a focus to mitigate mine plan cost escalation, materials and consumables inflation, and a very strong labour market. The strength of our operating performance, combined with record average revenue, resulted in strong cash flow generation in the June quarter, and that's demonstrated by the movement from a net debt position at the end of March of $1 billion to net cash of 2.7 at 30 June. So, looking at the market, and Chinese crude steel production was 563 million tonnes in the first half of this calendar year, and that's an increase of 11.8% compared to the same period last year. And pleasingly, crude steel production outside of China has largely recovered to pre-COVID levels. And during that same period, we've seen strong ongoing economic activity supporting robust steel demand in China and across the rest of the world. Steel prices and margins in China remain volatile during the June quarter and throughout July, and that's been largely impacted by policy uncertainty regarding production curtailments. And at this stage, it sort of remains unclear whether these restrictions may be implemented and whether they are on production, steel capacity or sinter output. We expect the growth rate will slow in the second half, but overall we still anticipate that China's crude steel production will be up year on year. And despite some signs of seasonal moderation, the demand for iron ore remains strong, and iron ore inventory at China's ports has been steady at around 128 million tonnes. Iron ore supply from the traditional producers remains constrained, particularly in the high-grade segment, and with high-cost supply balancing the overall market. So we're continuing to monitor market developments, and we're remaining very close to our customers, and we do have Fortescue Trading Shanghai, which also provides us with on-the-ground visibility on market conditions. And during the June quarter, we achieved record average revenue of $168 a tonne, and that's an increase of 17% over the previous quarter. and it's a realisation of 84% of the average Platts 62 index. And this represents the 10th consecutive quarter of realisations at or around 85%. And this consistency in realisations can also be seen on an annual basis, with an average revenue of $135 a tonne in FY21, and that represents 88% of the average Platts 62 index. And that's a 72% increase in revenue per tonne compared to financial year 20, reflecting those strong market conditions and the sustained demand for our products. And consistent with the current supply-demand dynamics and the cyclical nature of the market, we have seen a slight widening of iron ore price spreads recently, but by retaining our focus on the things that we can control, which is safety, production and cost, we've sustained our industry-leading cost position, which ensures that we continue to generate very strong margins throughout the cycle while adapting and responding to market conditions. And since I addressed this conference in October last year, we've successfully delivered our newest mining operation at Eliwana. And their team achieved first ore through the ore processing facility in December. And that's no mean feat when you look back to early 2020 when construction was ramping up, just as the COVID-19 pandemic was sweeping across the globe and restrictions in WA were coming into effect. And the ramp-up at Eliwana has been very successful, with the operational team achieving their annualised run rate of production of 30 million tonnes per annum in July. And in fact, we're expecting to achieve payback on our investment in Eliwana very soon, and that reflects the low capital intensity of this project and the current strength of the market. The strong operating performance across our supply chain, together with the successful ramp-up and integration of Eliwana, contributed to Fortescue's record performance in FY21. So turning to Ironbridge, which is our major iron ore growth project with our joint venture partner Formosa, and in May this year we completed the technical and commercial assessment of the project with a revised capital estimate of $3.3 to $3.5 billion, and that's including Fortescue's share of $2.5 to $2.7 billion. And this project will deliver 22 million tonnes per annum of high-grade 67% Fe magnetite concentrate, and first production is scheduled in December 2022 with a ramp-up period of 12 to 18 months. And our Ironbridge investment decision in early 2019 was counter-cyclical, meaning that today ours is one of the few large-scale iron ore growth projects under construction globally. And clearly the iron ore market fundamentals today continue to support this investment. We anticipate strong demand for this high value in use product, which will attract a premium to the Platts 65 index. And Ironbridge represents a strategic investment with compelling returns for Fortescue and our joint venture partner, and also enables the delivery of an enhanced product mix. The project will also increase our overall production and shipping capacity to meet that very strong demand from our customers. And maybe just to provide you with an idea of the scale of Ironbridge. To date, we've completed over 4.5 million cubic metres of bulk earthworks. We will install 41,000 tonnes of steel, and that's more than 5 times the quantity installed at the recently completed Eliwana project. We're using 77,000 cubic metres of concrete, over 1,400 kilometres of power cables, and we have more than 3,000 contracts with 170 contracting partners in 30 countries. And as part of the technical and commercial assessment, logistical constraints relating to the delivery of large modules that have been fabricated offshore were addressed, and we're currently constructing a module offload facility at Lumsden Point in Port Hedland. And I do note that the first of those major modules were delivered to site during the quarter. So we're continuing to work closely with our partners and our suppliers to monitor any potential impact of COVID-19 border restrictions on the movement of specialist skills as we are ramping up activities at Ironbridge. And during the June quarter, our autonomous haulage fleet marked a very significant milestone, moving over 2 billion tonnes of materials since we first adopted autonomous haulage in 2012. And Fortescue has been a leader in the implementation of autonomous haulage across our iron ore operations, and our fleet now represents one of the largest in the world, with 193 trucks operating across the Solomon and the Chichester hubs. The introduction of automation has not only contributed to a safer working environment for our team members, it has also underpinned significant productivity and efficiency improvements. And our early adoption of technology has meant that our team members have been provided significant training opportunities, providing the ability for many traditional site-based roles to be relocated to our Integrated Operations Centre in Perth, as well as providing opportunities for those who are interested in a career that have come from outside the mining sector. And in today's climate of ongoing border closures and skill shortages, our forward-looking approach to technology and innovation has meant that Fortescue has not been exposed to the current shortage of truck drivers, which I know has been a recurrent theme here at the conference. And in line with this forward-looking approach is our strong focus on sustainability through our 3 pillars of setting high standards, safeguarding the environment, and creating positive social change. And from the outset, it was Fortescue's vision to ensure that the communities in which we operate benefit from our growth and our development. Ongoing changes in societal expectations and a generational shift in our investors, key stakeholders, as well as our employees, means that today we are seeing increased interest across the full range of environment, social and governance considerations. As a business, we're focused on ensuring that we address these expectations. And it's clear that with increasing momentum in sustainable investing, including record inflows into ESG funds, companies with leading ESG credentials will have access to larger pools of capital, leaving those that aren't stepping up on ESG at a significant disadvantage. And perhaps the biggest single issue accelerating this focus on ESG is climate change. And we know that to achieve the targets set by the Paris Agreement, the broader energy transition needs to happen far more rapidly than the middle of the century. And it is encouraging to see wide adoption of alignment to this view across governments and the business sector. And at Fortescue, we've signalled our intention to be an industry leader in addressing global warming. Building on our proud history of setting stretch targets, in March we announced our boldest and most important target yet, to achieve carbon neutrality by 2030. We've set out clear short-term priorities on our pathway to decarbonisation across key initiatives including green fleet development and investment in renewable energy. Commissioning activities are underway at the Chichester Solar Gas Hybrid project with energisation expected this quarter. And once that's operational, this will displace around 100 million litres of diesel that's currently used at our Chichester hub operations. The Pilbara Energy Connect project is also progressing, and once that's completed, it is estimated that 25% of our stationary energy across our mining operations will be powered by solar. We're also investing in an Australian-first deployment of zero-emissions mobility at a mining operation through a fleet of hydrogen fuel cell passenger coaches to replace our diesel fleet at our Christmas Creek operations. And this project also includes the construction of Australia's largest hydrogen refuelling facility to generate green hydrogen on-site from renewable energy. And critical to our decarbonisation strategy is our 100% renewable green energy and industry company, Fortescue Future Industries. FFI is establishing a global portfolio of renewable green hydrogen and green ammonia operations that will position FFI at the forefront of the global renewable hydrogen industry. Leveraging Fortescue's world-leading track record of innovation and infrastructure development, FFI's vision is to make renewable green hydrogen the most globally traded seaborne energy commodity in the world. And Australia, with its abundant solar, wind and hydropower resources, is ideally placed to meet the green energy demands of our neighbours and customers, many of whom have committed to net zero emissions by 2050. According to the Hydrogen Council, over 80% of global GDP is now located in countries that have net zero ambitions. And in fact, we've recently seen the US double its commitment, pledging to reduce its emissions by at least 50% by 2030. Japan has also upped its commitment to curb emissions by 47% by 2030, compared to its previous goal of 26%. And at the beginning of this year, over 30 countries have released their hydrogen roadmaps. And I do note that during his keynote on Monday, Professor Ian Golden singled out green hydrogen and the need for accelerated development in response to strong future demand. We know that green hydrogen is the most abundant and purest form of clean energy in the world and has the potential to offset a significant proportion of global emissions, with forecasters estimating that this market will be worth trillions of dollars in the decades ahead. And this includes global transportation, from passenger cars to heavy industry vehicles to shipping, which generates an estimated 24% of direct CO2 emissions globally. And to our north, our technology-led neighbours, Japan, South Korea and China, have together already pledged to put almost 8 million hydrogen fuel cell cars on the road by 2040. So I referred earlier to the concept of the Fortescue Flywheel, and this has now been integral to Fortescue's success. And this is the FFI Flywheel, and it starts with securing a portfolio of the world's best renewable energy resources, and then scaling the technology, developing projects and commencing production. So that's the supply, and FFI has a structural advantage through vertical integration, as Fortescue is an industrial-scale source of demand through our own decarbonisation activities. Increased demand contributes to increased scale and capacity, which in turn reduces capital intensity and unit operating costs and improves cash flow generation. So therefore, the flywheel turns with increasing momentum. And FFI will be a key enabler of our target to achieve carbon neutrality by 2030, investing in decarbonisation technologies to remove the use of diesel across our Pilbara operations. During the June quarter, FFI achieved significant progress on a number of heavy industry decarbonisation initiatives, including the successful combustion of ammonia in a locomotive, the testing of battery cells for use on Fortescue haul trucks, as well as the design and construction of a hydrogen-powered haul truck, the finalisation of design work for the next generation ore carrier that will consume renewable green ammonia, the completion of design and construction of a hydrogen-powered drill rig, and the successful production of high-purity green iron from Fortescue's ores at low temperature. A disciplined approach is required to achieve our 2030 target, and by taking a forward-looking strategic position, we are ensuring that our capital investments in decarbonisation are aligned with strategic decisions such as fleet renewal, and we're mitigating against potential risks in the form of carbon charge or the removal of the diesel fuel rebate in the future. So, ladies and gentlemen, I've said it before, I'll say it again, Fortescue has never been in better shape. Building on the second consecutive year of record performance, our FY22 guidance reflects our ongoing commitment to optimising returns from our integrated operations and marketing strategy, with iron ore shipments in the range of 180 to 185 million tonnes, C1 costs in the range of $15 to $15.50 a tonne, capital expenditure excluding FFI in the range of $2.8 to $3.2 billion, and FFI expenditure in the range of $400 to $600 million. Our clear strategic focus on optimising returns from our integrated operations and our marketing strategy, as well as growth and balance sheet management, are driving strong results and delivering benefits for all of our stakeholders. We're making a significant investment in iron ore growth, as well as energy infrastructure and new technologies to support the decarbonisation of our operations. And we have an eye on the future, pursuing exciting new opportunities in renewable energy and green industries, which we believe will be the next new major energy market opportunity, powering the economy and creating jobs for Australians. And as we enter this exciting phase of growth in Fortescue's journey, our work will continue to be underpinned by our unique culture and values. Our team's commitment to meeting key safety, production and cost targets, and their willingness to challenge the status quo to deliver operational excellence will be fundamental to the achievement of our stretch targets and our future success. So thank you, ladies and gentlemen. I think we've got time for any questions. Thank you.
Thank you, Elizabeth. There is time for questions, so if there are any from the floor, please raise your hand. Yeah, just down the front here.
Do you have any plans to offset the carbon emissions from the Chinese steelmakers utilising your iron ore?
Well, in terms of that would fall into Scope 3 emissions. So in terms of our plans to offset emissions, I actually think the fact that we will be carbon neutral by 2030, it means we are selling an iron ore product that is free of emissions. So that will contribute to the decarbonisation of the Chinese steel industry. We know a lot of our customers are looking at new forms of technology. That we're working with them and our technical marketing team across deep bed sintering, which also improves efficiency and lowers emissions. But the fact that we will have a carbon-free iron ore product will greatly contribute to that reduction in overall emissions. But as I said, a lot of our customers, we're working with them, we're investing in the future of steel making as well, but it will certainly be a contributor.
Are there any further questions? Great, thank you, Elizabeth.